Debt issuance volumes seem to be reducing for smaller companies in Spain. Borja Monforte examines trends in corporate bond markets. Hello Borja, and thanks for joining us today. Your last report says that the activity in the Spanish corporate bond market is likely to slow down in the coming months. What is causing this?
We believe that the unexpected results of the UK referendum with Brexit as an outcome and the current uncertain Spanish political situation without a clear government in place and the possibility of third elections in the near future are likely to slow down the activities for Spanish corporates in the debt capital markets in the following months. Similarly to what we can see in the Italian debt market, small and mid-caps access to capital markets will remain constrained by financial market turbulences and the protracted political uncertainty. Thanks to the ECB's corporate bond purchase program, Spanish large corporates may not need to issue more debt in capital markets because they issued a significant amount, around 7 billion euros in April, and we foresee that most of their funding needs for the next 12 months are already covered with issuances seen back in April. For small and medium companies, the picture is quite different. These companies are generally rated non-investment grade, therefore they cannot access the ECB's program and they will keep on funding their activities largely through financial institutions. In the first 6 months of 2016, bond volumes issued in MARF, which is Spain's fixed income alternative market, amounted around 300 million euros, which is very similar to 2015's first half. However, the bulk of the issuances seen in 2016 were largely composed by an insurance company and two project bonds, while pure corporate issuances were rather scarce. In the case of Italy, in the first half of the year, large corporate bond issuance volumes declined 3% or so compared to 2015. In the case of small and mid corporate bond issuances listed on the domestic bond market, volumes declined by 21%. So overall, we expect a similar trend in other European countries.
How does the ECB asset purchase program affect bond markets?
ECB's corporate bond program is clearly having an impact on the corporate bond yields. In the case of Spain, some issuances around 16 billion euros are already trading with negative yields for companies such as Telefónica, Iberdrola, Gas Natural, Amadeus, Abertis, Red Eléctrica, or Enagas. The expectation of low inflation rates plus the expansive policy of the ECB is driving this phenomenon for companies with a solid balance sheet, ability to generate free cash flow and/or with geographical diversification and overall defensive credit profiles. As an example, in Europe, last week we saw Deutsche Bank's 350 million euro bond issuance with a coupon below 0% already.
To what extent will factors such as Brexit or the banking sector have an impact on issuance volume?
These events, we call them kind of distorting factors such as Brexit, can have a negative impact on the market and on future bond issuances. But I think that the final impact will largely be determined or offset by other factors such as whether the bond can be eligible for ECB's quantitative easing or not, whether that specific company has exposure to UK or not, or whether the company has a solid credit profile or not. For instance, we think that these events clearly diminish the financial flexibility of small and medium companies as their access to capital markets funding is likely to shrink. Therefore, their ability to raise debt must only rely on the banking sector. If certain segment of the banking sector is suffering, that will probably increase the pressure for small and medium companies or big companies, but with weak credit fundamentals.
Some analysts point to the importance of earnings recession as a major factor for market dynamics.
It can affect, but I think at the end of the day, it will largely depend on the investor's profile. I think that those investors with a prudent approach might still be attracted by negative yields on companies with strong credit profiles and ability to serve its debt. Companies' growth is certainly lower than expected and desired by investors, but as long as the equity market is not perceived as an attractive alternative by investors, I think there will be quite a large number of investors willing to take positions in the fixed income market in the following months, despite the negative yields.
That was it for today. Thanks for watching, and we'll see you next time.